CEO and founder of 850 Club Credit Consultation. Hope you're doing well today. Man, of course, so glad to be done with 2020, right? And now we're preparing, to have a great year in 2021. I'm sure you all have the same. And to kick that off in the state of Illinois, but I know, you're probably saying, well, listen, this is only going to be helpful for Illinois. Well, it's the good thing about it is that it's a start, and the fact that Illinois is one of the first states to do it, that just means that other states will start to pick up on it. Because let's be honest, the only way out of this student loan situation is we need every industry to get creative. They gotta get creative, and one of the one of the best industries to do that would have to be the mortgage industry, because those loans are backed by the same government that backs the student loans. So let's go straight into it. Number one. So number one, you are going to get up to $40,000, towards your student loans, but that $40,000 must pay off your student loans. Okay, so let me give you a couple of examples. Okay, so number one, you have to qualify for the loan, and that loan is going to be a conventional mortgage loan. Most lenders are going to be looking for credit scores as low as 620, but preferably 650 or higher. Okay, now I know some of you all may have already started this process in general with a conventional loan, and you're probably like, well, Calvin, they told me I had to be a 680. That's that particular lender, but some lenders will let the system will let you qualify for as low as a 620 mortgage score. You guys have seen my video on multiple videos on how to get your mortgage score and things of that sort, but it's not what you're going to see when you go into Credit Karma. It's not even what you're going to see when you go to My FICO if you're not in the right section or category, and that is the mortgage category, for your mortgage scores. Okay, you drop the lowest, you drop the highest, and then of course you go with what's in the middle. Okay, so for example, just real quick, if your score is 603, 622, and 625, what's your middle score? You drop the lowest, which is the 602. I forgot 603, and then of course you drop the highest, which is the 627. And so now you're left with what? 622, right? So now that will be your middle score, and that will qualify for a conventional loan depending on which lender you go with, which we do have lender options as well too. What does this mean for you? Okay, and even if you can't benefit from this directly, you can still share this video, and you may know some people that are in Illinois, or your state may be, keep your eyes open, your state may be having this pretty soon. Okay, so what are the qualifications? Number one, we just mentioned that you must qualify for a conventional loan. So we know what the score requirement is, but your DTI has to make sense too. You can't have a $30,000 a year income with an $800 a month car note or some crazy like that, right? And I have seen it if they get around on numbers. The numbers have to make sense. Then your credit card debts. You can have some credit card debt, but it's more so the monthly payments that they're more so interested in. So if you're not having $100 a month payment, $200 a month payment, even if you're making those payments on time, okay, but that's where the lender kind of jumps in. So let's just try to keep this as simple as possible. You must qualify for a conventional loan, okay, and obviously you must have student loans. Now here's the thing: the student loans will only cover up to 15% of what the mortgage is in your student loans, with the max being $40,000. So let's go ahead and grab a calculator here. So let's say, for example, you're looking at a $200,000 house, okay, and then so times 15%, that's going to give us $30,000 towards our student loans. Okay, now once that's done and said, you cannot have anything additional. So let's say, for example, you have $34,000 in student loans. You're going to have to pay that other $4,000 off to get the $30,000 paid. Okay, so you're probably saying, well, Captain, I got $100,000 with student loans. Well, you're going to get $30,000 toward that, but you cannot close on the home unless you have no student loans. So clearly you would have to pay $70,000. So obviously that may not help. You're probably saying, well, Calvin, this is a waste of time. Not necessarily. because everyone's situation is different, obviously. But this is a great, again, this is just a start because there's a lot of people. Not everyone has hundreds of thousands of student loans. A lot do, but not everyone. Not everyone has 80,000. Not everyone has 50. Some people just have 40,000, 30,000, 20,000, 10,000, whatever. Okay. But the max participation that they can do is 40,000. And anything above that, you have to pay off before closing. Now, anything less than that, you don't get to keep the money. That was another question people asked. Well, what if I have $15,000 of student loans? I buy a $200,000 house and you guys cover 30 grand. Do I get to keep that difference? Not at all. But they will pay off your student loans as long as it's under that 15% balance. Again, 15% of the purchase price. Okay. So for example, if you're looking at a $300,000 home times 15%, that would be 45,000. So that's actually too much. So the max is going to be 250 times 15%. That's 37,500. So a little bit more than that. So, but 40,000 is, and whatever the math is, right? But 40,000 is going to be the max that that you can go into. Okay, and so I believe that's 275 or so. But that's what the numbers are going to end up being. Now, the greatest thing about this program is that this is not just for first-time home buyers either. You can be going to your second home, third home, fourth home. It can be an investment property. So there's a lot of different stipulations, depending on obviously if states start to roll this out, what the percentages are going to be, what the maxes are going to be. A lot of different scenarios is going to be added to this process. So you most definitely got to make sure that it makes sense to you. But not only is this phenomenal, obviously, for the state of Illinois, but this is a step in the right direction. We don't know what next month is going to hold. Once the inauguration and all the rest of that stuff happens, even if they announce something, we don't know how soon it's going to be implemented. There's a lot of things that are on the table. But to do this was unexpected. And this is not just it is kind of like a flash in the pan, is until funds are exhausted. But some states are going to be picking up on this. So, but that's how it is in Illinois. You must qualify for a conventional loan. You must, have $40,000 or less or student loans. Anything above that, you got to pay off before closing. And that's pretty much it, on that. And there's some other things as well too. But this one is this is the most important, mortgage loan that is available right now in the state of Illinois. So if you like this video, like it, you want to share it. And as always, be sure to subscribe as we have nothing but great content on the way. Thank you guys so much and have a great day.